And welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 4th, 2026, and we're diving into the latest earnings report from Ascent, a specialty chemicals company known for its performance-driven solutions. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Ascent has released its fourth quarter and full year 2025 results, and there's a lot to unpack, from their strategic divestitures to their financial performance.
Revenue and profitability overview. Let's start with the top line. Ascent reported net sales of $18.8 million for the fourth quarter of 2025, a slight increase from the previous year. However, their gross profit saw a decline. John, can you explain this?
Absolutely. The increase in net sales was primarily due to higher volumes, although this was partially offset by lower average selling prices. Gross profit decreased by 2.9% to $3.4 million, mainly due to rising material and fulfillment costs, which also impacted their gross profit margin, reducing it by 90 basis points to 18.3%.
And what about their bottom line?
Ascent reported a net loss of $1 million for the quarter, translating to a diluted loss per share of 11 cents. This is a significant drop from the net income of $0.2 million in the same quarter last year. The adjusted EBITDA also turned negative at minus $1.1 million, reflecting the challenges they faced in managing costs and strategic investments.
Full year performance and strategic moves. Moving on to the full year, Ascent's net sales declined to $74.9 million. However, their gross profit saw a substantial increase. What drove this performance?
The full-year results are quite interesting. Despite a 7.3% decline in net sales, gross profit surged by 61% to $17.2 million. This was largely due to effective cost management, strategic sourcing enhancements, and product line optimization. Their gross margin expanded significantly by nearly 1,000 basis points to 23%.
And how did their strategic divestitures play into this?
Ascent executed two major divestitures in 2025, selling off assets from Bristol Metals and American Stainless Tubing. These moves were part of their strategy to focus on their core specialty chemicals platform, which is now more streamlined and positioned for future growth.
Liquidity and shareholder returns. Let's talk about liquidity and shareholder returns. Ascent seems to be in a strong cash position. Can you elaborate on this?
Indeed, Ascent ended the year with $57.6 million in cash and cash equivalents, and they have no debt outstanding under their revolving credit facilities. This strong liquidity position gives them flexibility for future investments and operations.
And what about their approach to shareholder returns?
In 2025, Ascent repurchased 745,524 shares at an average cost of $12.26 per share, totaling approximately $9.2 million. This indicates their commitment to returning value to shareholders, even amidst challenging market conditions.
CEO's perspective and future outlook. What insights did the CEO, Bryan Kitchen, provide regarding Ascent's future?
CEO Bryan Kitchen emphasized that despite the seasonal and market softness in Q4, the full-year results demonstrate a strengthening earnings profile. He highlighted the company's clean and focused specialty chemicals platform, which is well-positioned to accelerate profitable growth as market conditions improve in 2026.
It sounds like Ascent is optimistic about the future.
Yes, they are. The strategic actions taken in 2025, including divestitures and operational improvements, are expected to translate into higher quality earnings and increased operating leverage moving forward.
Key takeaways. To wrap up, Ascent's 2025 performance shows a company in transition with significant improvements in gross profit and a strong cash position despite a net loss. John, any final thoughts?
Ascent's strategic focus on their specialty chemicals platform and their strong liquidity position are promising. While they faced challenges, their actions in 2025 have set a solid foundation for future growth. Investors should watch how they leverage these strengths in 2026.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Ascent's performance in the comments below.